This is Chad Staskell from Eagle Wealth Management with our educational economic update for December 2018. In this month's video, I'm going to discuss some of the major headlines that influenced markets in November and hopefully help provide some insight into what these developments could mean for you as an investor. November closed on a strong note despite a month of volatility. Details like trade disputes, oil supply, and dropping prices caused markets to fluctuate throughout the month. Following the disappointing October U.S. market returns, November saw the S&P 500, Dow, and NASDAQ all experience modest positive returns. One reason for November's upturn was the annual G20 summit in Buenos Aires and the anticipated meeting between President Trump and China's president. Ahead of their session, the Dow rallied nearly 200 points. The leaders planned to meet to discuss cooling down the tense trade environment in hopes of finding a consensus between the two countries. In addition, U.S., Mexico, and Canada signed the U.S.-Mexico-Canada Agreement. While this still must pass through Congress, some are hopeful the North American Free Trade Agreement replacement will resolve some trade disputes. Others remain skeptical. G20 news also impacted oil, which had its largest monthly decline in 10 years. Continuing from October, oil prices fell 22% throughout November on fears of an international surplus. Leaders from Saudi Arabia and Russia met at the summit to discuss solutions before OPEC's December meeting. These developments boosted investors' confidence. Updates on interest rate hikes also helped November finish on the upswing. On Wednesday, November 28th, Federal Reserve Chairman Jerome Powell remarked that interest rates are close to the current neutral range of 2.5% to 3.5%. His comments seem to suggest the Fed may throttle back interest rate hikes, which cause stocks to rise. Still, economists expect interest rate hikes in December and also continuing into 2019. Additionally, a variety of key data was released in November that suggests the U.S. economy is still on track for growth. U.S. factory production climbed higher than expected, and the ISM Manufacturing Index beat expectations. Still, construction spending dipped slightly for the third month in a row. Consumer confidence remains high, though it slipped in November after an 18-year peak. The index suggests that some Americans worry about the income and the state of business in the U.S. Nevertheless, tax cuts and a solid labor market have helped boost consumer sentiment. Further, we learned that economists predict more than 200,000 jobs were added in November. This development keeps unemployment rate hovering near 3.7%, the lowest rate we've seen in almost 48 years. Also, revised third quarter gross domestic product numbers show a 3.5% increase in corporate profits, reaching 6-year highs. Together, these healthy indicators suggest that the economy is on the right track as we close out 2018. As additional data and information from November becomes available, we will have a clearer understanding of the month's performance. But as always, we encourage you to keep your focus on fundamentals. Please remember, nothing we talk about here is a recommendation. If you'd like to discuss your personal financial situation, please feel free to give us a call at 541-330-0220. We'd be happy to talk with you. Well, that's it for this month's Educational Economic Update. Once again, this is Chad Staskell with Eagle Wealth Management, signing off for the month of December 2018.